We have Mr. V.S. Hariharan, the MD and Group CEO of Redington, joining us. Before we talk about the financials, let's just take a look at what Redington's quarter gone by has shaped up to be. Revenue is up 18%, net profit looking healthy at a 23% growth. Margins have also expanded. So, welcome to the show and thanks so much for joining us. The company has recorded highest ever PAT in this quarter. Help us understand what were the key growth drivers for the company this time, what helped, and what were the levers of growth, and do you expect this growth momentum to sustain in FY26 as well?
Thank you for having me at the show. For this quarter, as you rightly said, 400 crores was a profit delivered with a 23% growth. All geographies and all business units contributed very well. So we had a very good growth in India of nearly 26%. UAE was 24%. We are also present in Africa, as both East and West Africa grew at 11%, and Saudi Arabia, a very important geography for us, grew at 7%. So all geographies pulled in with very strong growth. From a business unit perspective, we are in a range of categories. So the cloud business grew at 41%. The technology solutions, which is server storage and software, grew at 25% plus, and so did mobility, the smartphone category 18%, and the PC category at 11%. So it was a fairly balanced performance in terms of all geographies, all business units pulling in the top line growth of 18% and a bottom line growth of 23%. All of them contributed.
Okay, so that's the outlook on the profitability front, but let's also understand a little bit of the outlook going forward, because you've mentioned about sustained momentum in Africa and promising growth in Saudi Arabia. Could you add some color to that? How much business and growth can we expect coming in from these regions?
Okay, so let's talk specifically about Saudi, because it's a fairly good sized business, almost $1.5 billion in our portfolio. We did have some kind of reprioritization last year. Saudi was growing at 30% the year before last, and because of the reprioritization of government investments, we did experience a degrowth in the first half of the year, which has started coming back. The coming year looks promising on Saudi. In terms of growth coming back, both in the corporate and government investments. There is a lot of investment being made by cloud providers, by data center investments, AI infrastructure, etc. And we definitely, there's an outlook of double-digit growth coming back in Saudi. Africa, both West and East, has been interesting over the last several quarters, has been a good growth story on both the mobility area as well as the technology solutions and cloud. It's always challenging the African markets because of the currency devaluation and the interest rate and inflation. We have to watch very closely how much business we do, and we have to manage risk versus return. So we are cautious about how we do the operations in Africa, but there is definitely good growth momentum in both these markets, and I would say Saudi will definitely count for us in the coming year.
On both of those segments, and also help us understand, with Apple now assembling more iPhones in India, how has Redington's Apple distribution business evolved? Is there a volume or margin upside from local sourcing? Anything you could help us with on that front?
I think it's a combination of things. It's not just the manufacturing. Apple's focus in India over the last few years has increased dramatically, and we've been a key distribution player for them in the distribution part of the market. So they provide a range of different platforms that we work with, which allows us to play in both the main cities as well as upcountry. And we've also been a key player in the MacBook, the PC part of the business, which has experienced good growth as well. But local manufacturing helps in a few ways. One, it allows us to get better responsiveness and better capacity to fulfill our demand. It also allows us to look at market unique requirements, which we feed back to Apple based on what are the market unique requirements and how they can help us. So there are a variety of things that we work on, and it's been a really good business and a good partnership working with them.
Okay, and we have to ask you about your take on the trade tariff discussion that's been happening all across the world. We are seeing some progress coming in on UK, China, and India's bilateral talk with the US as well. What impact can it have on Reddington's business going ahead? Are you expecting a favorable outcome from our delegation that has gone to the US right now, and we are currently underway in our trade and tariff negotiation?
So let me speak broadly first and then talk about the specific question you had on tariff. We have been closely watching. We have also been in discussion with the brands. Clearly, many of the brands are looking at diversifying their manufacturing operations in different places to respond to the tariff situation. We've not seen direct impact on any pricing or tariff impact in any of the markets we are in, because we are not in US, we are not in Europe, and we are only in the emerging markets, which is India, Middle East, Africa, Turkey. Specifically, there has been no direct pricing impact. There could be some supply chain disruptions as we go forward, because of the manufacturing distribution in multiple places. We have to closely watch our demand forecast that we need for our markets, working with the brands to make sure that we have these fulfilled from either the local in-country supply or the closest manufacturing location. So we have to get better at forecasting, is what I see in the next few months and quarters. Specifically on the delegation that has gone out, obviously that will result in various bilateral agreements. And again, since we don't sell much into the US, I don't see a direct impact for us. We are largely sheltered and protected, because most of the big brands we work with have local operations, both manufacturing and otherwise, and we source the product directly from them locally. So we don't see a big impact in the short term, but the supply chain disruption we need to watch out for.
Okay, and let's talk about some deals, some collaborations. You've recently inked some collaborations with Banyan Cloud, Access Communications, Amazon Web Services. Could you shed some light on any big partnerships that are in the pipeline, and can we expect any more announcements on this line in the future?
Okay, so the big area that we talked about is the cloud growth. And cloud for us consists of three major components. One is the hyperscaler business, working with Microsoft, AWS, and Google. The security solutions, a range of security solutions becoming very important, both in the enterprise segment and the mid-market, and the pure software as a service. All three are very important parts of the cloud business. Banyan, as you rightly described, is one of the announcements we made, but we every quarter we tie up with new brands on both the software as a service as well as the security solutions. And we must have tied up with at least half a dozen to a dozen brands last quarter. That's an area of growth, because a lot of these software brands used to work directly with enterprise, not work through distribution. And increasingly, because they want to access mid-market and small enterprise, they come to distributors, because we provide them that access through the whole range of partners we work with. I can't talk about specific brands per se, but there are many tie-ups on the line, and there are many tie-ups we've announced in the last 2 quarters, which are public, and we want to grow in this segment 30-40%, which is the opportunity that is there. It's a $1.5 billion business for us, $1.5 to $1.7 billion business for us out of the $11+ billion in our portfolio. An important segment, 15% plus, but growing very fast because of the cloud growth.
Okay, and sir, before we let you go, while everything looks good and earnings performance has been very good in the quarter gone by, just want to get your sense on the renewable vertical, and the revenue from that front has dropped by 80% on a year-on-year basis. Could you help us understand what's caused this dent, and any recovery on the horizon? When can we expect that to happen?
So can you repeat that question? Which vertical did you talk about?
Renewable vertical, sir.
Sorry, you just went mute. I just
No
couldn't hear
problem.
you.
I was asking you about the renewable vertical. That revenue, we've seen an 80% year-on-year dip. Could you help us
Sure,
understand what's been
sure,
causing
sure.
this dent?
Okay, so there has been clearly a lot of regulatory change in India on the renewable area. Previously, we used to import a lot of the solar panels from outside, and we used to serve the market using that. But as the ALMM came into the picture, the regulatory came into the picture, we are tying up with local manufacturers. At the same time, we are trying to leverage the PM program that has been launched about a year back, to serve our EPCs or system integrators. So we're rebuilding the business with local supply and leveraging local demand for rooftop, because the segment we play in on solar is largely the rooftop and C&I segment. We're rebuilding the business back, and we are quite optimistic. Clearly, the business has come down because we could not be doing the business in the business model the same way that we have been doing in the past. And we're very hopeful to rebuild the business model in the right direction to make it an important business for us.
Okay, sir, on that note, we'll let you go. So that was Mr. V.S. Hariharan, the management at Redington, speaking to us about the quarter gone by and the outlook going ahead, which sounds very optimistic. Thanks, sir, for joining us
Thanks
once
for
again.
having me.
Before we
Thank you.
slip into a